What this course covers. Topics 1 through 3. Welcome to the Financial Modeling and Valuation course with AI and Excel. This is a complete, sequenced investment valuation program that takes you from reading a filing to defending a valuation conclusion in front of an investment committee. Every concept you learn flows directly into the next, building one integrated analyst workflow across 7 topics. What this course covers. Topics 1 through 3. In Course 1, Valuation Fundamentals, you will learn why value comes before price, how to separate enterprise value from equity value, and which valuation method fits each professional context. You will build your first DCF model step by step in Excel, master the Excel skills every valuation analyst needs, and develop an AI prompt library you will use across every course that follows. In Course 2, Financial Statement Analysis, you will read income statements, balance sheets, and cash flow statements the way equity analysts, credit analysts, and M&A professionals do. You will analyze revenue quality, earnings drivers, net debt, free cash flow, ROIC, and DuPont decomposition using real NVIDIA and Microsoft data, with AI accelerating filing review, ratio analysis, and red flag detection throughout. In Course 3, Three-Statement Financial Modeling, you will translate business research into a forecast model that produces EPS, EBITDA, and free cash flow. You will build CAPEX, depreciation, working capital, debt, interest, and share count schedules that connect across all 3 statements. You will verify the model using 6 cross-statement checks, calibrate it against guidance and consensus, and build bull, base, and bear scenario cases. The course spans 105 lessons across 271 learning modules. After every lesson, you will complete a quiz built around a real analyst situation, not a textbook recall question. What this course covers. Courses 4 through 7. In Course 4, WACC, you will build the discount rate that drives every serious DCF model. You will set capital structure weights using market value, calculate after-tax cost of debt, and derive cost of equity using the capital asset pricing model with real NVIDIA data across a 6-tab Excel model. You will then apply WACC as a capital allocation test to judge whether an investment creates or destroys shareholder value. In Course 5, Discounted Cash Flow Analysis, you will build the intrinsic valuation method used in equity research, M&A, and private equity. You will calculate FCFF, build a full projection schedule, estimate terminal value using Gordon growth and exit multiple methods, and stress test the implied share price using sensitivity tables. In Course 6, Comparable Company Analysis, you will master market-based valuation. You will select peer companies with analyst judgment, apply PE, EV to EBITDA, EV to revenue, and FCF multiples in the right context, and convert peer pricing into an implied share price range that cross-checks your DCF. In Course 7, Professional Valuation Report, you will convert your analysis into a defensible conclusion. You will define purpose, scope, and standard of value, select the evidence that belongs in the report, weight the methodologies, reach a concluded value, and write an executive summary that earns the reader's trust. After each course, you will complete applied tasks using real company filings, AI prompts, and Excel models, producing analyst-grade outputs that build your capability layer by layer. The AI simulations, theory becomes judgment under pressure. After all 7 courses, you will enter 3 AI-powered role-play simulations. These are not multiple-choice tests. You will act as a working analyst, make real valuation decisions, and defend your conclusions against a senior reviewer who will challenge every assumption. In AI Simulation 1, you will evaluate SignalWorks Analytics as an acquisition target. You will test whether its revenue growth is real and cash-backed, normalize EBITDA, assess free cash flow conversion, and judge whether the valuation deserves a premium, renegotiation, or walkaway. In AI Simulation 2, you will defend a 3-statement forecast model for ArcLight Semiconductor under investment committee review. You will justify every assumption from business drivers, build and verify the model under schedule stress, and defend EPS, free cash flow, and scenario ranges against senior scrutiny. In AI Simulation 3, the HelioGrid Acquisition Valuation Committee, you will evaluate a live acquisition target at an $850 million seller-indicated enterprise value. You will defend WACC, FCFF projections, DCF and CCA outputs, sensitivity ranges, and the EV to equity bridge before presenting a final bid recommendation to the CFO. At every scenario step, you receive instant AI scoring across 3 dimensions. The scoring measures theoretical accuracy, the relevance of your judgment to the specific deal context, and the professional quality of your decision. This is what separates knowledge from field capability. What you will walk away with. When you complete this course, you will have built the capabilities that working analysts apply every day. You will read any filing and extract the signals that drive valuation judgment. You will build a verified three-statement financial model, calculate WACC, and run DCF and CCA models on any public company. You will write a professional valuation report with a concluded value, sensitivity analysis, and an executive summary that communicates clearly to decision makers. You will use AI as a genuine acceleration tool, knowing exactly which steps it supports and which steps require independent analyst judgment. You will leave this course with 13 professional Excel and Word templates completed across every course, ready to apply to any company you analyze next. The 3 AI simulations will have tested your judgment under realistic pressure. The 24 applied tasks will have produced real outputs from real data. The 353 quizzes will have confirmed that your understanding runs deep enough to apply in the field. This is not a course that ends when the final lesson is complete. It is a program that prepares you to walk into your next valuation assignment with the frameworks, the models, the judgment, and the confidence of a working analyst. By the end, you will not just understand investment valuation. You will be able to execute it, explain it, and defend it.
One, why value always comes before price. Introduction. In this lesson, we begin with the most fundamental concept behind every investment decision. Part 2. Why valuation is always a range. Every valuation requires assumptions about the future, and those assumptions involve judgment. You must estimate future earnings growth, but the actual result could be higher or lower. You must also select a discount rate, and reasonable analysts can Part 3. How valuation drives your investment return. The simplest way to measure an investment return assumes